If you've been following me, you know I list a lot of books, the same books over and over again. Here's the order that I think you should read them in. If you know nothing about money, a complete beginner, start with Money Master the Game, and then move on to I Will Teach You to Be Rich. These two books are written in very, very easy to follow English. Both of them will mention something known as index funds. Read this book next, The Little Book of Common Sense Investing by Jack Bogle. You will learn everything you need to know about index funds. Now from there, to learn about the wealth mindset and understand how wealthy people spend and use their money, read these two books, Rich Dad, Poor Dad, and Cash Flow Quadrants by Robert Kiyosaki. You will learn what the wealthy do. Then from there, read Cryptoassets and A Guide to Investing in Gold and Silver to learn about these assets that most people tend to ignore. Here's why you need to read The Little Book of Common Sense Investing by John C. Bogle. Page after page after page, he drops fact after fact. It's written in really plain English that's digestible for any reader, and as long as you just have an average IQ, you can totally follow along and become a better investor. Like, look at this chart. In this chart, he shows the path of two different investors. One investor who did not reinvest their dividends, and one investor that did. That's a huge difference. The numbers don't lie. It's graphs and charts like that and the plain English that it's written in that make this book a really great part of any beginner investor's library for learning and improving their skills as a long-term investor.
I was probably 22 or 23. I started interested in being an investor, and I read a book. I read a book called The Intelligent Investor. It was written by Ben Graham. What's kept me intrigued is that it's one of the few jobs where every day you can study something new.
Ted Williams wrote a book called The Science of Hitting, and in it he had a picture of himself at bat and the strike zone broken into, I think, 77 squares. And he said if he waited for the pitch that was really in his sweet spot, he would bat 400, and if he had to swing at something on the lower corner, he would probably bat 235. And in investing, I'm in a no-called strike business, which is the best business you can be in. I can look at 1,000 different companies, and I don't have to be right on every one of them or even 50 of them. So I can pick the ball I want to hit. And the trick in investing is just to sit there and watch pitch after pitch go by and wait for the one right in your sweet spot. And if people are yelling, swing you bum, ignore them. What kills great businesses, if you look at, I do believe in looking at history, and I like to study failure, actually. And my partner says, all I want to know is where I'll die, so I'll never go there. And we want to see what has caused businesses to go bad. And the biggest thing that kills them is complacency. I mean, you want a restlessness, a feeling that, you know, that somebody's always after you, but you're going to stay ahead of them. You always want to be on the move. And when you've got a great business, you know, like Coca-Cola, which is, there aren't any like Coca-Cola, but you really, the danger would always be that you rest on your laurels. But I see none of that, obviously, at Coca-Cola. But that is the key, to compete the same way when you've got 1.8 billion servings being sold daily as when you were selling, 10 a day. And that rest.
Here's how you find every single stock that Warren Buffett buys and sells. Go to Google and type in Berkshire Hathaway 13F. When you get the results, make sure you click on the link that says sec.gov. That's the one. Here we're looking at Berkshire Hathaway. When you're on this page, look at the right-hand side to where it says filing date. Make sure you get in the newest information. As you can see on the first one, statement of changes in beneficial ownership of securities, then click on the word documents. Once you're in, you can go down to Berkshire Hathaway and click on the word reporting. Here you can see all the stocks, the dates, and everything you need to know. That's it. That's all you got to do. That's exactly how you find this information for Berkshire Hathaway, but it works for any company. But make sure you get the data directly from the SEC's website. Don't trust what anyone else tells you.
I'm going to read you a small little excerpt from this book, Tax-Free Wealth by Tom Wheelwright, who's a CPA. Nearly all 99.5% of the tax code exists solely for the purpose of saving you money. 99.5% of the tax code exists solely for the purpose of saving you money. So why is it that we pay so much in taxes if it's meant to save us money? Well, it's because most of us are just employees. Employees will pay the most in taxes. But if you become an investor and you invest your money, you will pay less in taxes. And there are more tax deductions for people investing their money in businesses or in real estate. It's because you're helping to provide jobs and helping to provide housing. Therefore, you are alleviating pressure off the government to do that, which is why you will get tax breaks.
Right now, the corona crisis is happening and people need to understand the importance of paying down debt. I have been talking about this for a long time, for years, telling people don't stretch yourself too far. But individuals have been taking on credit card debt and student debt and writing it out. But they're realizing why that isn't a good idea. It's so important, particularly for those different types of things like credit card debt. That's 17% interest to pay that off as soon as possible. Even though there's a stimulus check coming in, I'm still seeing a lot of people that say, I'm not going to use that stimulus check to pay off my debt. I'm going to hang on to it just in case. It's so important to get that burden off your back in times like this. That's when we get the lessons learned, and we don't want to learn the hard way.
If you've been following me, you know I talk a lot about index funds and index fund ETFs, and that's what I mainly invest in. That's where most of my money is. And I recommend it to other people as well. Here's the game I'm playing. This is why I use this strategy. I'm trying to take my money every month and invest it in this portfolio through this app. Okay, those are my index fund ETFs. I'm putting money in every month into this. As I make more money from all the other work that I do, I will put in more money into this. So that way, one day, my balance in this portfolio from all the money that I've invested, reinvesting dividends, and then from the growth rate over the many years, looks like this. It reaches this amount. Then from this amount, and I'll keep growing it. From this amount, I will take every year maybe this much out. Then from there, I can use that much to pay off my bills and then do whatever the hell I want. Here's the thing about my college experience. I didn't learn anything about personal finance. I know some people did, but I didn't. So personal finance to me was something that had to be self-educated, and that's what I did. All of 2019, I spent reading books on personal finance. And for me, there are 8 books that really stood out, and that altogether, if you bought them, they would cost less than $100 off of Amazon. Now, you can obviously find all these books online. I'm going to list them right here. These are the books. If you read these books in this order, you'll have a solid foundation in all things money when it comes to credit, your banking, investing, using debt, so on and so forth, and different types of investments like index fund ETFs or real estate and so on, and gold and crypto. You read these books and you'll have a solid foundation in money, and you'll be able to manage your own money.
Here's 5 stocks that you can buy and hold forever. Part 1. 3M, Walmart, Johnson & Johnson, Waste Management, Colgate.
Did you know you can invest in big pre-IPO startups? Like the venture capitalists? Well, you can, and some examples right now are Robinhood, 23andMe, Postmates, Impossible Foods, SpaceX, Airbnb, and even Barstool Sports. If you had invested in DocuSign back when they were private, you could have made over 18 times your money if you still held it. Here's how you do it. Go to either sharespost.com or equityzen.com. Sign up as an investor, create an account, fill out your investor information. You have to qualify as an accredited investor, so fill out that information. Search the listings for a company you like. And now you can invest in it. Here it is again.
Stock Trading 101. What is EPS and why should you care? EPS stands for earnings per share. For example, Apple has an EPS of $12.60. On the flip side, a company may even have a negative EPS. So if the EPS increases year over year, that means a company is becoming more profitable. This also means that more people are willing to pay a higher price to own stock in this company. So typically the stock price goes up as well. So the company's EPS is calculated by getting their revenue, minusing expenses, minusing the dividends, and then dividing by the outstanding number of stock. So let's say my company made 1 million in revenue. We had 100K in expenses and 100K to pay out in dividends. This leaves us with 800,000. From here, we simply divide the 800K by our outstanding shares, which in this case is 100,000 outstanding shares. So our earnings per share is $8 here. So if EPS is consistently growing, that might be a good indicator that this is a good buy.
How to find stocks in the morning for free. Finviz.com. They'll give you the top percent gainers in the market, and they'll give you the top losers in the market. You can even go to Screener and filter stocks that fit your criteria. Alright, this next one's free too, and I mean, it's just OP that it's free. Benzinga.com. Hover over markets, and you can even check things over the pre-market, after hours, ETFs, Forex, anything you want, binary options, commodities, so whatever you trade. So I hope this saves you some time, and if you want more useful tools, go ahead and like this and follow me.
So 5G technology is blowing up. Here are the stocks you can invest in to take advantage of this. Here are all the 5G chip manufacturers. They make the chips that go inside of all the 5G devices. And here are all the wireless companies that will be implementing the 5G towers and 5G networks across America. And here are all the gaming companies that are going to benefit from all the high bandwidth that 5G provides.
This is my strategy for picking stocks for dividend investing. Go to tradingview.com, select this little TradingView icon right here, and go to Stock Screener. Make sure dividends is selected. Go filters. Under dividends yield, you go above or equal 4. And all these companies here on the left all have dividend yields of greater than 4%. So let's pick one, for example. I'll do Chevron, so CVX. Now go over to seekingalpha.com and input that ticker symbol on the search bar. Scroll over down here and click on dividends. And scroll a little bit farther to find dividend growth. Seeking Alpha mobile site doesn't really work, so we'll click on View Desktop Site, and this gives the entire dividend payout history for this particular stock. And this is what I'm looking for: consistent, reliable dividend payouts that are gradually increasing over time.
Have you ever wanted to collect rent every month instead by owning apartment buildings like this one in Atlanta or this one in LA? Well, you can, and all you need is $500 to start. And you don't even need to be accredited.
It's kind of cool because you don't have to go through the hassle of actually buying a house or managing properties like I have to do.
So if you're interested in an easy way to invest in private real estate, you should check out Fundrise, Realty Mogul, or CrowdStreet.
And let me know what you think in the comments.